let's talk about this whole idea of failures and the government backstop. So what I'm, and correct me, but what I'm getting from you, I think, is the sense that maybe the government should not have come in to firm up some of these companies, and yet we were told all along, you don't understand, yeah, this is bad, but it's worse if we let them go under.
I think they allowed a situation to get so out of hand for so many years, and this is what the book essentially says, and it shows how each time they bailed them out in the past from their stupidity, when I'm meaning they, that's government, the Fed, easy money, bails out Wall Street. Wall Street takes incrementally much more risk.
But
here's the thing.
Charlie, we've bailed out the airlines. We've bailed out Chrysler in the past. You know, the government's been there before, and it's worked out.
Maybe they should. Has it worked out?
Well,
I mean, I don't know if Chrysler's worked out because they're back.
Yeah,
the airlines, I don't know. I mean, it's not exactly a efficient, functioning business model. but and that's the problem. When you bail people out, it doesn't become efficient and functioning. But think about what Wall Street did. I mean, Wall Street, each and every time they bailed them out, came back and took much more risk, where they took so much risk. I mean, there's numbers in the book. I believe $100 trillion of derivatives and all this crazy stuff on the balance sheets and trades, where here's where I think you got me a little bit wrong. If they didn't bail them out in 2008, I think the economy would have seized up in this way.
It was coming to a close, was it not? It was pretty much seized up.
I mean, I reported. I was reporting every day. I broke the story about AIG, the government doing the AIG bailout, and I broke the story about the TARP plan, the initial bailout plan. And I could tell you that if you were covering, that was on a Tuesday and a Thursday, and this is just 2 days, if you're covering Wall Street between those two times, you saw things were so bad. Now, it might not have looked bad here in Syracuse, you know, where you go to work and you go home to your kids, and you don't, because this is in Wall Street. But if nobody wants to trade a stock and a bond, which we were getting into that sort of scenario, you know, that means IBM is worth zero. That means your pension fund is worth zero. That means your money market funds are seizing up. That's what we faced.
So to that end, despite what the government may have done or may not have done in the past, from 2008 to current, would you give the government high grades in terms of averting what could have been an even worse situation?
I don't give them high grades because I think, you know, this is what you have to do. I mean, it's not like, I would have given them higher grades if they saw it coming earlier. I mean, one of the things the book points out is that in 2007, when, you know, if you were on Wall Street, you knew things were getting bad. They had no clue how bad it was. I mean, there's a scene in there where Bernanke's with some Fed guys, and they're at the Jackson Hole. You know, they have this annual Fed sort of day at Jackson Hole, Wyoming, and they're all sitting around saying, you hear about the bond market? It's not doing so good right now. And it was like, if you were on Wall Street, you were getting scared because you knew so much of your assets, your capital is wrapped up in these crummy bonds, and you knew that, you know, that if you have a capital problem, people aren't going to lend to you. Wall Street firms and banks, it's all about lending. That's how they stay alive.
Just quick on this. Harmful or helpful that so many of the top government officials now came basically from Wall Street?
And from Goldman Sachs. And,
well,
I don't know. I mean, I'm of two minds of this, and half of me says it's too close to. There's kind of there's clearly an unholy alliance, and maybe that's the root cause of it. But you know, the Wall Street guys do understand how the financial system works, but you know, every time I say that, I get people criticizing me, saying, you know, it's the fox guarding the hen house, so to speak.
All right, last question on this segment. I can't get anybody to talk about this on my normal shows, and probably with good reason. But are we focused just a little too much, do you think, on this notion of Wall Street bonuses? I mean, it's a handful of people that, yes, get a lot of money, but boy, it's been the headline. I mean, is that big of a deal?
The $20 billion of Goldman Sachs. Here's why it is a big deal. Okay, and I'm not a class warfare guy. If you know about me, I'm a libertarian conservative. I think people, if you make a good product, you do make money. You should earn how much you should eat what you kill, as long as you do it legally, right?
Okay. Without government support.
But that's the problem. I mean, Goldman Sachs, if you look at this, I mean, because it's an easy example, they're amassing $20 billion of bonus money. They're doing that because they're traders, okay? They're not a bank, yet they're classified as a commercial bank, and with that cheap financing, by being classified as a commercial bank, they can amass that much bonus. I just don't think the taxpayer...
They paid back their government loan, though. They
Okay.
paid back, right? They paid back their
They pay back, but it doesn't matter. They're still a bank. And you can't get a checking deposit. They're not lending small businesses money. Why do we classify banks as banks? Why do we say, okay, we're going to FDIC their deposits, we're going to, deem them sometimes too big to fail? Why do we do that? Because banks provide a social good. Banks lend to small business. They hand out mortgages. At least they used to. They're not doing it as much right now. But what is Goldman Sachs? What is their social utility? Can you tell me, besides making themselves rich?
No, but that was going to be my point. My follow-up question was going to be, they're not there to cure cancer. They're not there to reinvent a car that can get 100 miles to the gallon. Right. Their incentive is making money.
But that's the scary thing. Wall Street's incentive used to be to advise, to do stuff that you do. That was the business model, to go to a company, to do an IPO, help a tech startup do an IPO. And now it's all focused around, we're going to do some crummy trade, or some, I call it crummy, they're calling it some lucrative trade, and we're going to make a lot of money.
I knew this would happen. I'm telling you, your
I'm sounding like a socialist, and I'm not. That's the scary thing.
No, what's bothering me is I've got 3 shows to do with you, but they're running a little out of time. Rapid fire here, a couple of things I'm going to throw at you. Okay. Despite some of the negative you're saying on Goldman Sachs, is Goldman Sachs not the best firm on Wall Street?
It is the best firm at doing what it does, even if it's doing stuff that's not right.
On the flip side of that, is AIG the biggest disaster, the biggest mystery out there that you've ever come across?
It's a mystery because I still can't get my hands around how they took that much risk. But they drank the Kool-Aid like everybody else.
David Darst probably.
No, I don't.
From Morgan Stanley. I saw him on an interview. You have to know him to appreciate it. But somebody was asking him about AIG, and he said, "Well, when I get to heaven, there's 2 things I want." I'm a big fan of William Shakespeare. Apparently, he said, "I want Bill Shakespeare to write something for me." And he goes, "I want to pull somebody aside and find out where did all the money go that went to AIG."
That's right.
And where did it go?
Well, it's a sinky. Listen, when you insure that much toxic debt, I mean, it can evaporate pretty quick. And some of it went to Goldman Sachs, by the way. That bailout benefited Goldman Sachs.
Citicorp, powerhouse on Wall Street.
Used to be.
It's a $4 stock.
Yeah, because it's not a powerhouse. That, to me, is the biggest tragedy of this entire thing.
Really?
I mean, yeah, Citigroup, to me, is the real scandal. Everybody points to Goldman. I'm not a big Goldman defender. I just beat him up for like the last 5 minutes. But Citigroup, to me, is the ultimate sort of the ultimate in what's wrong with the system. I mean, think about what they did. There was this law called Glass-Steagall, right? Mm-hmm. It was a Depression-era law in 1999. In order for Citigroup to be legalized, because Citigroup was created when they merged Citicorp, the commercial bank, with Travelers Group, which was the brokerage and the risk-taking activities. They merged it. It was illegal when they did it. Citigroup fought and lobbied to get that law, Glass-Steagall, which divided those 2 functions, killed, and it did. Mm-hmm. So what you essentially did, and this is the scary thing, they mixed risk-taking with mom and pop and deposits and lending to small businesses, which sounds good in theory. They both can. It's a conglomerate, and when one side is down, the other side can pick it up. But think about what they did. They basically federally insured, because it's a bank. They federally insured risk taking, and that led to the demise of Citigroup, which, by the way, is think about how many billions were lost just from shareholders. Something like $250 billion.
I know. All right, quickly, you mentioned Dick Fold at Lehman Brothers. Maybe one of the worst guys on Wall Street, in your view? He's got quite a great history.
He's the epitome of what's wrong. Arrogance and the belief. And there's a scene in the book where he's about to sign the bankruptcy document. He really believed that government was going to bail him out at the end. And that's the arrogance of Dick Fold not to sell that firm earlier is going to go down in history.
Again, on the flip side, who's the smartest guy on Wall Street? Would you give that to Jamie Dimon?
Larry Fink.
Really?
Yeah, I think Larry Fink.
Tell us who Larry's from.
Larry Fink he's the creator of the mortgage-backed security at First Boston. He blew up. Remember that first mortgage-backed implosion in 1988? In many ways, this book follows the arc of his career, where when at the end, in 2008, when everything is blowing up, Larry Fink is one of the sages of Wall Street, stays out of it, and built one of the biggest companies in the world right now. BlackRock manages $3 trillion of money. It's an amazing story, and this book is about the arc of his career and how he learned from his mistake. Okay. Not everybody learned from their mistakes.
And that's where we're going to end it, because that was going to be my last question for you. As you know, Wall Street has an incredibly short memory, and as investors, we forget. We don't seem to learn the lessons of history. What should the takeaways be from the book? What are the lessons here? How do we avoid this?
The lesson of this book, and it's, like I said, it's done narratively to the people. Like when you read about the people, is that there's a reason why these guys acted what seems to be in a stupid way, and there's a reason why they were so arrogant that they thought they can take so much risk. And the reason why is because they had an incentive, and that incentive is government. And I think what the average investor, what the voter should worry about, is when government incentivizes big business to do certain things. It's not a level playing field, and I think that's what caused the financial crisis. The fact of the matter is government incentivized Wall Street to take risk beyond any manageable sort of metric of what risk should be taken.
This is fascinating to me and to our viewers, I'm sure. I certainly appreciate you joining us. The book is The Sellout. It's on newsstands and what have you now, Barnes & Noble. I got mine at Amazon. Pre-ordered. It came a little late, by the way.
Thanks,
but
sorry about that.
yeah, but I do thank you for joining us. Great interview. Well, again, thank you for
great show.
spending time.
I do this all the time. This was a good show.
Well,
this was
if you're in the area again, we'll have you back.
Thank you.